We're back in overtime. It's time for our 2-minute drill. Joining us now is Richard Bernstein. He's CEO and CIO of Richard Bernstein Advisors. Good to see you again. So let's talk about this premise you have. There's hard landing, there's soft landing. What's this third outcome?
So, Scott, great to be with you. The third outcome is that the Fed just isn't fighting hard enough here, and that we have more inflation than people think for longer, and we don't get a recession for quite a far out into the future yet. I think it's kind of a false dichotomy, hard landing, soft landing. It could be the Fed's not really fighting.
Well, I mean, is that really true, though? I mean, are you throwing this out there just to throw it out there, or is that what you actually believe?
Oh, no, we've said many times, we think the Fed is hunting, but it's like hunting an elephant with a pea shooter. So, they've got their pith helmet on, they're out in the jungle, they've got their khakis, they look splendid, and they're talking the game, but they're not really fighting. And so what that leads to is more inflation longer than people think.
Well, I mean, what if inflation's already peaked, and how are they not fighting? I'm not following you here. What's wrong with what they're doing, right? QT plus 50, and you've had everybody from Brainerd to Mester come on our air in the last week, suggesting there's the pause in September is unlikely.
Well, that's my point, is that they're jawboning like crazy, but they're still very fearful of tightening too quickly. So here's a way to think about it. Play along at home, the home version of Hollywood Squares. The real Fed funds rate, the Fed funds rate minus inflation, averages 1% over the long term. Under Volcker, it was plus 10, right? That was the famous sledgehammer coming at the economy. Today, it's like minus 7%. It's virtually the most negative real Fed funds rate in history. It's hard to argue that you're trying to slow the economy. It's hard to argue that you're really trying to fight inflation with a negative real Fed funds rate. So you could even cut inflation in half right now and you still have a negative real Fed funds rate.
You could make the argument, too, and then we got to go. I mean, the jawboning seems to be working.
Well, we'll see. I mean, you have in pro-inflation sectors leading the market quarter to date. Energy is up. You'll find materials is outperforming, industrials are outperforming, and you're finding the sectors that really depend on slow growth, no inflation, falling interest rates are the ones that are lagging. So I think the market has sniffed this out a little bit.
All right, we'll see. Rich Bernstein, I appreciate your time as always.
Great.
We'll talk
Thanks,
to you
Scott.
soon.